Catex TV. Today is Thursday, December 4, 2014. My name is Matt Bernat, filling in for Frank Fortunato, who is away for the rest of the week. You can also follow more updates on Twitter at Catex TV. At least 11 people, including 7 gunmen, were killed and 25 wounded in armed clashes Thursday between police and unidentified militants in the center of Grozny, the capital of Chechnya in southern Russia, officials said. The gunmen were armed quite seriously. They had everything they needed in their arsenal, including machine guns and grenade launchers. They had information that on December 12th, the Russian Constitution Day, they were planning to carry out a series of terrorist attacks, a Russian government official said during a radio interview. At the time of the attack, there were no students or personnel inside the school, another official said. The gunmen arrived in the city shortly after midnight in 3 cars and attacked a police checkpoint, killing at least 3 officers. The attackers then barricaded themselves in a nearby media building, which caught fire as police surrounded the building and a shootout ensued. Residents were awakened by the explosions in the middle of the night. Sporadic shootings and explosions were still heard in the streets outside around 9 a.m., and that police told residents not to leave their houses until the operation ended. The operation against the remaining militants was continued during the day, a local journalist told Echo of Moscow. The war on terror that President Vladimir Putin launched in the separatist-controlled Chechnya in 2000 boosted the Russian leader's popularity, but left Grozny and some towns and villages in ruins, reportedly killing thousands and forcing thousands of others to leave their homes for refugee camps in other Russian republics. Insurance industry losses from the severe hail and thunderstorm events that struck Brisbane, Queensland, and Australia are expected to continue to rise, moving well past the point where local insurance companies will call on reinsurance support. The storm, which struck last Thursday, bringing strong winds and violent large hailstorms to the area, is now thought to have caused damage of anywhere up to $1 billion Australian dollars, and how much of that will be borne by insurers is yet to be defined. The Insurance Council of Australia estimated earlier today that the insurance industry loss stood at 482 million Australian dollars, with about 68,000 claims lodged by property and motor vehicle owners affected by the hailstorm, 17,500 for house and contents claims, and about 50,000 for motor vehicles. That number is expected to rise further as claims continue to be lodged by residents and commercial property owners that have suffered damage. Insurers are beginning to count the cost, and some already expect the losses will eat through their retention or deductibles, resulting in them making a claim on their reinsurance program. Suncorp is one such example of an insurer. Suncorp's released a statement saying the number of claims is expected to increase, and although it is too early to accurately estimate the final claims cost for the event, Suncorp expects it to reach the maximum financial impact of 250 million Australian dollars. Beyond 250 million Australian dollars, Suncorp has a 30% quota share reinsurance agreement with Berkshire Hathaway, which will see Warren Buffett's firm take a share of the loss. Another insurer, Insurance Australia Group, said today it was dealing with about 15,000 claims from the hailstorms. They also have a statement saying that they expect that this event will result in a net claims loss between 140 and 170 million Australian dollars. The mayor of Brisbane, Graham Quirk, told the ABC News that the storm was likely to be the biggest event for insurers in the region in more than 30 years. He said that he expects the bill to be around 1 billion Australian dollars. Currently, no catastrophe bonds, however, are expected to be exposed to severe thunderstorm risks in Australia, although a growing number do carry Australian perils such as cyclones and earthquakes. The Federal Emergency Management Agency, FEMA, will examine whether it can force insurers to reveal whether they manipulated flood insurance claims to keep payments to Superstorm Sandy victims as low as possible, Senator Robert Menendez said Wednesday. The New Jersey Democrat and FEMA Administrator Craig Fugate made that commitment during a meeting with senators representing New York and New Jersey. Menendez said he expects FEMA to require insurance companies contracting with the agency on flood insurance to disclose all peer reviews by engineers and adjusters so policyholders can determine how their claims were evaluated. We made it very clear to FEMA that we're going to continue on this until we have success, Menendez said after the meeting. FEMA covers losses insured by the National Flood Insurance Program, but private insurance service and write the policies, a FEMA spokesman said after Wednesday's meeting that the agency will do everything to ensure peer reviews are made possible to the policyholders. This meeting followed findings last month by a federal judge in New York that a write-your-own insurance company, which performs insurance servicing work as part of the contract with FEMA, had engaged in reprehensible gamesmanship with disaster victims, and such practices may be widespread. The case revealed that New York homeowners were denied a claim for structural damage because an engineer retained by the flood insurance provider quietly altered the report on the damage as part of the peer review process. The alterations shifted the cause of the damage from Superstorm Sandy in 2012 to the effects of the house settling. The engineer made the changes without visiting the property. Many people have come out against this, including Senator Cory Booker of New Jersey. He suspects homeowners are being lowballed in payments on their flood insurance claims, and lawmakers need records from engineering and law firms to prove it. They expect to know by Friday whether FEMA can provide these reports. Melbourne, Australia's east has been rattled by the largest earthquake in 50 years in the area, with residents likening the tremor to a passing freight train. The 3.2 magnitude earthquake struck at 6:05 a.m. local time, about 5 kilometers south of the other eastern suburb of Pakenham. The quake was felt as far as 50 kilometers away from its epicenter, with more than 700 Melbourne residents feeling effects of the tremor. About 20 years ago, the only way to book a flight was to call a travel agent, a middleman whose job was solely to connect you with vendors. That job is now obsolete, replaced by internet-based services from billion-dollar companies like Priceline, TripAdvisor, and Expedia. Parker Conrad wants to do the same thing to health insurance. Insurance brokers, the middlemen of the $884 billion insurance industry, charge a hefty fee for connecting individuals and businesses with insurance providers. Conrad believes that service is unnecessary in today's world, so he built Zenefits, a software startup to cut them out. It has quickly caught on. 18 months in, Zenefits has 2,000 paying clients and 450 employees. The San Francisco-based company has signed a development deal with Arizona to add 1,300 jobs there in the next 3 years. A June funding round worth $66 million valued the young company at $500 million. This was just 6 months after its previous funding round, which investors called the hottest deal in Silicon Valley. Zenefits software helps businesses manage all of their human resources functions in one place, such as health insurance, payroll, retirement funds, and equity grants. The company gives its software away for free, taking a commission from vendors like insurance providers or brokerages. Zenefits is on track to double its entire revenue in the last 4 months of this year. Monthly revenue is slated to be 20 times higher than last year's. Conrad says he can't grow the company fast enough to meet demand. Insurance providers have no problem with Zenefits, Conrad says, because the company sends them new clients. But the brokers, those middlemen from whom Zenefits is stealing commissions, face an obvious threat. Zenefits itself is a licensed insurance broker. One broker recently told the San Jose Mercury News that every broker in the country is now scared of Zenefits. This week, that threat manifested itself in the form of a regulatory fight. The state of Utah has moved to ban Zenefits from offering its software for free in the state. Utah Insurance Commissioner Todd Kaiser sent a letter to the company outlining the ways Zenefits is breaking the law by offering free software. Most states, including Utah, do not allow insurance brokers to offer rebates to customers to get them to buy insurance plans. Utah's insurance department argues Zenefits' free software is a rebate and is therefore illegal. A bulletin issued in June 2013 outlines that brokers cannot offer things like payroll services and data analysis unless a fair market value fee is charged. The state has asked Zenefits for a settlement fine of up to $97,000 with 24 months of probation, which would be waived if Zenefits began charging an acceptable fee for its software. A bulletin issued by the department in May outlines fair market value as determined by a survey of service providers provided in western United States. Charging a 500-person company $850 per year for full HR services is non-compliant because it is too low, the bulletin says. A more reasonable price for such services, according to the department, adds up to tens of thousands of dollars. Zenefits temporarily has stopped taking on new customers in Iowa, but still will support its existing clients while it makes its case to the department. That is the news for today. Thank you for watching. If we have any important breaking news, we'll come back on and tell you. As always, you can follow more news updates on our Twitter account at Catex TV. Once again, thank you for watching and have a nice day. We will see you tomorrow.